what you think is the current scenario and the road ahead in terms of the tech winter and its implications.
So happy to. I think the tech winter has been one of the most hotly debated topics that we've seen for a long period of time. It's a contradiction in terms itself. But I think one thing is very important to understand is that valuation is actually a function of fundamentals, a function of potential, and a function of market sentiment. I think the market sentiment is a macro factor that has adversely affected the entire startup ecosystem to a large extent. If you study the rise of the startup ecosystem since about 2016, 2017, you'll notice a massive dislocation happened in 2020 itself. Now, 2020 is where the federal governments and the federal banks across the world ended up printing a large amount of money, and interest rates actually came down to zero. Now, when that happened, larger institutional investors started actually chasing alpha. So in order to generate that kind of alpha, fixed incomes were almost giving them zero yields. The stock market was severely dislocated because of the sentiment was bad. So startups in the private companies emerged as the hottest asset class, followed by crypto itself. Now that the interest rates have started to rise and fixed incomes have actually increased in terms of their yield, we're seeing a massive pullback of capital from all these particular areas. So this is actually the market sentiment factor that's actually affected very strongly upon that. Now, on a fundamental basis, I think one of the biggest changes we've seen in the startup ecosystem is a shift from growth to profitability. Now, when the value of a dollar today versus the value of a dollar 5 years later was actually the same, because interest rates were extremely low, every investor encouraged the startups to start following growth, saying that once you have growth, profitability will end up actually following. Now that interest rates have actually risen, we've seen them actually change their tune to say while growth is important, profitability is actually key. The ability, any company that has free operating cash flows is king. Now that switch, this is 6 to 7 years of learned behavior that has to switch within a short period of time. And we're actually seeing this actually play out amongst all of India's unicorns for that matter. And one more thing that needs to also be said is even though everyone actually chases the amount of capital coming in and investments is a function of burn. How much money I end up burning, therefore I end up having to raise a large amount of capital. But if the ecosystem is trying to actually turn profitable, and many of them are trying to turn cash flow positive as of now, the need to end up raising as much capital as it did previously actually goes away. So I wouldn't call this is a winter. Yes, there has been a funding slowdown. There will be a number of business models who I believe are actually children of a low interest rate environment. They could only survive when they had an infinite pool of capital available on tap. Some of these business models honestly need to actually die. This creative destruction that's inherent to the startup ecosystem needs to actually end up showing up such that more innovative businesses can come in. So every winter is actually followed by a spring. We are fairly certain that the spring is actually in the offing itself. And the startups that come out of this are going to be far more resilient than anything we've actually seen in the past.